Thanks, Josh. Well, thanks everyone for coming out tonight. It's clear that along with the elections, the economic crisis is the number one issue on people's minds. So it's no surprise, in my opinion, then, that there's a corresponding increase in interest in the ideas of socialism. Now, perhaps it's not yet the broad masses that are scampering to find out more, but it's noticeable that more and more people are at least friendly and open to hearing about these ideas. Now, a lot of people have some vague idea as to what Marxism and socialism are, but their opinion has more often than not been influenced by the mainstream media or some academic professor. And so, in other words, they have an opinion on Marxism, but it's usually not their own opinion. So my aim tonight is to just give a brief overview of the ongoing economic crisis, and explain a bit about how this relates to Marxism and socialism, and above all, explain why I think that people need to get involved in actually doing something about it. Now, I'm definitely biased. While the facts and figures that I'll give all come from the mainstream media and from the government itself, my analysis of the situation is most definitely from a working class Marxist perspective. So this crisis really began quite a few years ago with the deregulation of the market and the vast extension of private, corporate, and public debt. After the bursting of the internet bubble back in 2000, 2001, investors started piling their money into the property market. Housing and other property prices skyrocketed, and it seemed as though this would continue indefinitely. Millions of people piled into the market, some of them because they legitimately wanted to buy a home, others went into the market as speculators because they wanted to cash in on rising prices, and they would flip the houses, as they say. They'd buy them and then fix them up a bit and then sell them again at a much higher price in order to just make a profit. Subprime mortgages were offered to a lot of people who were very unlikely to be able to keep up with the payments, especially when they were given adjustable rate mortgages, which means that the payments started low, but then when the rate reset, they went a lot higher. So, for example, people might have been just barely scraping by in order to pay $900 a month, and all of a sudden they had to pay $1,500 a month from one month to the next. So this was a completely impossible situation for hundreds of thousands of poor families, and especially has hit Black and Latino families in particular. Consumer credit has also been expanded enormously in the last decade. Consumer spending now accounts for 70% of economic activity in this country. Now, by issuing more and more credit, they were able to expand the market artificially beyond its narrow limits. But the problem with credit is that you have to pay it back, and with interest. Exactly. So all of this debt was chopped up into little pieces and bundled along with other kinds of debt, which was then sold on to other speculators, other investors, who then bundled up their own little packages of debt and sold them on to someone else. And speculation just went completely nuts. Billions of dollars were made, not by investing in companies that then would invest in factories and hiring workers and producing goods, but often simply they'd make money by betting on whether or not a given stock would fall or rise on any given day. It was a giant casino, which is basically what the capitalist stock market is. And eventually this house of cards just collapsed. This is the biggest speculative bubble in the whole of human history, and it was pumped up to the bursting point by the bankers, the government, and the Federal Reserve. And in the rubble of this house of cards, of course, lie millions of Americans' modest savings and investments for retirement, education, and health care. So what started last summer as just a few bad loans has now spread to the rest of the economy. Every single major Wall Street bank and investment company has now collapsed, been sold off at fire sale prices, or been taken over by the government. Just a year ago, a statement like this would have seemed absolutely ridiculous, and yet it's a fact. However, the bailouts of these companies are not nationalization in the Marxist sense of the word. In reality, what it means is the socialization of debt and risk, while private profit, which is the cause of this mess in the first place, remains untouched. And once profitability is restored, of course, their plan will be to sell all these institutions back to the private sector at a low price, so that these speculators can then do the whole thing over again. Now, the stock market's been swinging wildly and violently over the last few weeks, from one extreme to another. One day you've got the largest drop in history, and then the next week you've got one of the biggest gains in history. And in a single day, over $1.2 trillion just simply disappeared. Because on the stock market, as in physics, what goes up must come down. And as we all know, the bigger they are, the harder they fall. And like I said, this is the biggest speculative bubble in history. The banks started calling in their loans, including loans that they made to other banks. And these loans were made based on predictions for endless expansion, for rising home prices, rising stock market, rising profits, and so on. So now everything that led to the boom over the last few years has turned into its opposite, into a downward spiral that will lead to even more cuts and more layoffs. So for millions of people, in a very short space of time, the American dream has gone up in a puff of financial smoke. And still, billions of public dollars are going to be handed over to these same corporate criminals who are just going to continue along the same path. So it's no wonder that people are so outraged, and that we had protests on the street across the country, even on Wall Street. I'm sure people saw reports of that, which is unprecedented, at least in recent times. And so it's also no wonder that people are talking about the Great Crash of 1929 and the Great Depression. And it's interesting that the distribution of U.S. income today is actually almost identical to what it was in 1928 on the eve of the big crash. In 1928, the top 1% of Americans earned 24% of the national income. Today, that top 1% earns 23% of the national income. And of course, the amount of money nowadays is absolutely colossal. I mean, it's so much greater. But we should also remember that the Great Depression didn't actually kick in until a couple of years later. So no matter what's going on in the market on any given day, the market might go up or it might go down. This crisis is far from over. This is an organic crisis that reaches very deep, and it's not going to go away in the matter of a few days or a few weeks. So we can't say in advance how deep or how long this will be, but the indications are that it could be pretty bad. All of this instability on the stock market and in the financial sector is now having a very real and immediate effect on the lives of working people, who of course are the ones who are going to have to pay for this crisis. It's always the same. During the boom times, the rich benefit, and during the hard times, working people and the poor have to foot the bill and have to tighten their belts even further. Just a few statistics about how poor the health of the economy is. Housing prices fell by a record 16.3% in July. And of course, the housing market will eventually stabilize. But in the meantime, ordinary working families are losing their homes, and entire neighborhoods and even cities are being completely decimated. And this is a pretty incredible figure, in my opinion. The U.S. steel industry has 29 blast furnaces. And steel industry, of course, is the backbone of any industrial economy and supplies steel and other products to the rest of the economy. Now 17 of these 29 blast furnaces are going to be shut down. That's over half of them. So this is going to mean more closures, more layoffs throughout the rest of the economy. It's interesting that the top story on CNN.com today, before I came to the meeting here, was the story was called "Job Cuts. Who's Next?" That's a pretty grim story. And in the last 2 weeks, the following companies have announced mass layoffs: Merck, Yahoo, General Electric, Xerox, Pratt & Whitney, Goldman Sachs, Whirlpool, Bank of America, Alcoa, Coca-Cola, the Detroit automakers, and nearly all of the airlines. In September alone, last month alone, 2,269 employers announced mass layoffs. That means that they fired 50 or more employees at a time. This was far higher than in the spring and summer, and was actually the highest number since September 2001.